Thinking about borrowing money but not sure if it's the right move? Whether it's for a big purchase or to cover an emergency, borrowing can seem like a quick fix. But is it really worth it? In this video, we're breaking down the pros and cons of borrowing money so you can make the best decision for your financial future. Borrowing money can be tempting, especially when you're faced with an opportunity or a financial crunch. But before you take on debt, it's crucial to understand both the benefits and the risks. In this video, we'll explore the pros and cons of borrowing money, helping you weigh your options so you can make an informed decision that aligns with your financial goals. If you're new to the channel, hit the subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Borrowing money is something most of us have considered at one point or another. Whether it's taking out a loan for a new car, financing a home, or simply covering an unexpected expense, the option to borrow can seem like a lifeline. But here's the challenge. Borrowing money isn't just about getting the funds you need today. It's about understanding the long-term impact on your financial health. The problem is that while borrowing can provide immediate relief or help you achieve your goals, it can also lead to serious financial strain if not managed properly. Interest rates, fees, and repayment terms can quickly add up, making it harder to get ahead. There's also the risk of becoming too reliant on credit, leading to a cycle of debt that can be difficult to break. On the other hand, borrowing can be a powerful tool when used wisely. It can help you build credit, invest in opportunities, or navigate emergencies. The challenge lies in knowing when it's a smart move and when it might do more harm than good. In this video, we'll dive into the pros and cons of borrowing money, so you can make a decision that supports your financial well-being rather than putting it at risk. The pros of borrowing money. Let's start with the potential benefits of borrowing money. When used correctly, borrowing can be a powerful financial tool. For instance, taking out a mortgage allows you to purchase a home, which is often one of the biggest investments you can make. Home loans typically come with lower interest rates and longer repayment terms, making homeownership accessible for many. Another advantage is leveraging credit for opportunities that could lead to financial growth. For example, borrowing money to start a business or further your education can pay off in the long run, as these investments often lead to higher income or valuable assets. Credit can also help you build a strong credit history, which is essential for getting favorable terms on future loans or credit cards. In emergencies, borrowing money can provide the immediate relief you need. Whether it's covering unexpected medical bills or essential repairs, having access to credit can be a lifeline when cash flow is tight. The key here is using credit in situations where the benefits outweigh the costs, ensuring that the debt will be manageable and serve a meaningful purpose. The cons of borrowing money. Now, let's talk about the downsides. Borrowing money, while useful, comes with risks that shouldn't be overlooked. The most obvious drawback is the cost of borrowing. Interest rates, especially on credit cards and unsecured loans, can be high, leading to significant interest payments over time. This means you'll end up paying more for whatever you financed, sometimes substantially more. There's also the risk of overborrowing. It's easy to be enticed by the availability of credit, but taking on more debt than you can handle can quickly spiral into a financial crisis. Missed payments can lead to penalties, higher interest rates, and even damage your credit score, making it more difficult to borrow in the future or get favorable terms. Additionally, the psychological burden of debt can't be ignored. Being in debt can cause stress, anxiety, and a feeling of being trapped, especially if you're struggling to keep up with repayments. It's important to consider not just the financial cost, but the emotional toll that borrowing can take. Lastly, borrowing for the wrong reasons can be detrimental. Using loans or credit to finance a lifestyle you can't afford, for instance, can lead to a cycle of debt that's hard to escape. It's crucial to borrow only when it aligns with your financial goals and when you have a clear plan to repay the debt. When borrowing makes sense. So, when does borrowing make sense? One of the best times to borrow is when it's an investment in your future. This includes taking out a mortgage to buy a home, financing education, or starting a business. These types of loans typically have the potential to increase your net worth or income over time, making the debt worthwhile. Another scenario where borrowing might be a good idea is in emergencies. Life is unpredictable, and sometimes you need to borrow to cover essential expenses like medical bills, car repairs, or unexpected home maintenance. In these cases, borrowing can help you avoid depleting your savings or selling off investments at a loss. Borrowing also makes sense when you have a clear and realistic repayment plan. Before taking on any debt, ask yourself how you will pay it back and over what period. If you can comfortably fit the repayments into your budget without sacrificing your other financial goals, then borrowing can be a smart move. When borrowing could be risky. On the flip side, borrowing can be risky if it's done without careful consideration. One of the riskiest times to borrow is when you're already in financial trouble. Using credit to cover everyday expenses or to pay off other debts can lead to a vicious cycle where you're constantly borrowing just to stay afloat. This is often how people end up in deep debt, struggling with high interest rates and unable to make progress. Borrowing to fund a lifestyle you can't afford is another common pitfall. It might be tempting to use a credit card or take out a personal loan to pay for vacations, luxury items, or other non-essential purchases, but this can quickly lead to debt that's difficult to repay. If the purchase doesn't have a long-term benefit, it's usually better to save up rather than borrow. Finally, borrowing without understanding the full terms of the loan is a major risk. Make sure you fully comprehend the interest rates, fees, and repayment schedule before committing to any loan. Hidden costs can turn what seemed like a good deal into a financial burden. Tips for borrowing wisely. If you decide that borrowing is the right move, here are some tips to do it wisely. First, always compare your options. Different lenders offer different interest rates and terms, so shop around to get the best deal. Look for loans with low interest rates, no hidden fees, and flexible repayment options. Next, borrow only what you need and what you know you can repay. Avoid the temptation to take out a larger loan just because it's available. Stick to your budget and ensure that your monthly repayments won't strain your finances. It's also a good idea to pay off your debt as quickly as possible. If you can, make extra payments to reduce the principal balance and save on interest. Finally, consider creating an emergency fund before borrowing, so you have a financial cushion in case something unexpected happens. By following these tips, you can minimize the risks and make borrowing work for you, rather than against you. This is the moment where everything comes into focus. Borrowing money can be either a powerful tool or a dangerous trap, depending on how you use it. The key to making borrowing work for you is understanding that every loan or credit decision is a step toward your financial future. It's not just about getting the funds you need today, it's about what that decision will mean for you tomorrow. Imagine being in control of your finances, where every borrowed dollar has a purpose and a plan for repayment. This is the moment where you take charge, making informed choices that align with your goals. The real power of borrowing comes from using it strategically, whether it's to invest in your future, cover an emergency, or build credit responsibly. This is where you decide to use debt as a stepping stone, not a stumbling block, and start building the financial future you want. Understanding the pros and cons of borrowing money is essential for making informed financial decisions. It's not about avoiding debt entirely, but about using it strategically and responsibly. Now that you're equipped with this knowledge, let's explore some real-life examples and scenarios to see how these principles play out in practice. Now that you know the ins and outs of borrowing money, it's time to take action. If you're considering a loan or credit, make sure you weigh the pros and cons carefully before making a decision. Have questions or want to share your own experience? Drop a comment below. I'd love to hear your thoughts. Don't forget to like this video if you found it helpful, and subscribe to Money Blueprint by Any Arch for more tips on making smart financial choices. Share this video with someone who might be thinking about borrowing so they can make an informed decision too. Let us know what topic you want us to discuss next. Remember, the power is in your hands to borrow wisely and build a stronger financial future.